More volatility for the meme stocks ahead of the open today. Shares of GameStop and AMC both down in the pre-market, still up triple digits for the week so far. Jim, you were just talking about the battle between the buyers and sellers.
Right. Well, there's really a question about whether anyone is shorting the stock to the buyers. So last night around 4 o'clock, the buyers came in and they just blitzed it higher. And it just seemed like they were taking. There were no sellers. Maybe there's some sellers like who have a good till cancel order to sell. But then sellers just flooded into the market at 4:30 a.m. They were like heat-seeking missiles just blowing through all the bids. So you saw 52, 51, 50, right down to 40. And then they tried to recover. It took it back to 53 around 8 o'clock, and now they're back. There are real sellers. And that's what they didn't have yesterday. So they have to wait till options start, and then you have to short the options to be able to make the trade if you're a market maker, and they'll try to blitz them. But right now the stock's very heavy because the valuation of it, no one can figure out how you can possibly get to the 40s. I mean, I did a compare last night to Best Buy because they had the same market capitalization, and one has $5 billion in revenues, one has $43 billion in revenues, one is making $16 million, the other one's making more than $1 billion. It's very hard to because they're both gaming. You buy gaming at both those places. So the people who are doing the memes, if they actually want to do a comp, a compare right now to Best Buy, and you'll understand why you're paying too much.
Are you saying the craze, to the degree it's been a mania of sorts, is peaked?
Well, I think that the company's a little wiser. I think that there is no investment case, and there's not a lot of shorts. They need more shorts. They need more short sellers that they can bust. And right now, they haven't succeeded in making these people cover. Only 24% of it is short. David, that's not enough of GameStop. That's not enough to generate a true short squeeze, typically.
It's not really a quarter of the outstandings being short.
No, but they had 100%
100
before.
plus, right?
Yeah, it was obviously when the meme stock craze began years ago. It was a much higher percentage. Right. That's true.
Now, I will say,
although they've suffered some serious pain.
No, but they did have a profitable. They did have the last 12 months. They were profitable in 23, but I don't think they're making a lot of money now. I mean, this is a very bad time to be in that particular business. Okay, bad time to be in the gaming business.
Yes, it would seem to be.
I mean,
even if you're delivering it digitally, if they somehow are, that transition.
Well, that's free.
Brick and mortar. Yeah,
brick and mortar.
Have they come up with a new strategy under Ryan Cohen that you're aware of? Because I haven't followed it.
It's a mystery. I suggested many different strategies.
Oh, well, I'm aware you did.
And I always...
You also have some land in New Mexico, if they're interested in that.
I have 600,000 acres and option.
Maybe a gaming I
think
park.
that anybody who's in the gaming business would be wise to think about that 600,000 option. You could build Walt. When Walt came to Florida, there was nothing there. There's nothing in New Mexico.
It was
nothing.
swampland.
My place is midway between Denver, which is a city of success, and Austin. Used to be a city of success.
Sounds like data centers to me. Just go for it. Data centers.
Don't forget water.
Put up a power plant.
Okay.
Yeah.
This TBA. I'm coming with TBA.
We'll work on it.
First, let's be real. We all know that the recent rally has nothing to do with the fundamentals of either GameStop or AMC. We all know that. The bigger issue here, however, is that the public are not allowed to decide what the stock of a company is worth. Yesterday alone, we saw well over 30 halts in GME stock and AMC stock. Individual investors are told, don't worry, this is to protect you. Is it really though? Over 30 halts in a stock within 24 hours is ridiculous. This is not to protect individual investors, and the public knows it. The money managers who decide the prices of the stocks in the market and their paid pundits in the financial press want you to know that they are in control, not the public. They control the halts. They inject infinite liquidity into the market at their discretion. They, in the words of Ken Griffin, quote, set the prices of securities and, quote, trying to drive the value of companies towards where we think they should be valued. And they inaccurately call this entire process market efficiency. This, in fact, does not make markets more efficient. Rather, it weakens the public's trust in the public markets and the institutions that are supposed to regulate the markets. If we really want efficient markets that are transparent and function on true supply and demand, then we should require that all individual investors' orders be routed to lit transparent exchanges rather than opaque dark pools. We should ban payment for order flow due to the conflicts of interest it creates. We should remove market makers' ability to create liquidity out of thin air so that we have true supply and demand in the financial markets. And we should hold entities accountable when they fail to deliver on their obligations. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.